Welcome back to Investing Talk podcast. Today, we're zooming in on a company that's been, well, a real roller coaster for investors, Tilray Brands. The big question, the one we hear a lot is now the right time to buy Tilray Brands? We're going to pull apart their financials, chart their market moves, and scout out what's on the horizon using their latest filings, technical data, and analyst reports. But before we jump into the numbers, if you find this discussion helpful, please hit that subscribe button, give us a like, and leave a comment. And seriously, if there's a specific company you want us to put under the microscope next, let us know in the comments below. We love hearing from you and shaping our discussions around what you want to know. So let's unpack this fascinating and sometimes perplexing company.
Yeah, and what truly jumps out about Tilray Brands is that it operates in an industry that's not just evolving, but often outright turbulent. To really answer if it's a good buy right now, we can't just look at one piece of the puzzle. We need to connect the company's core financials, its market performance, and those broader, sometimes wild sector trends. We'll examine the hard numbers and the sentiment swirling around it.
Okay, so let's check its vital signs first. Let's start with the financial pulse, digging into their latest 10K. Is this company built on solid ground or maybe quicksand? They reported net revenue of $788.3 million for fiscal year 2025, a 12% increase year over year. That sounds like a healthy beat, doesn't it? My immediate thought is this profitable growth, or are they burning cash to achieve it?
That's absolutely the critical question. While revenue growth is definitely there, it's crucial to look deeper. Their gross margin for that same fiscal year was only 26.8%. Yeah, and that was significantly affected by a super competitive market pushing prices down and the rising cost of their inputs. What really matters here, though, is the operating loss. It stood at a whopping $156.3 million for fiscal year 2025. This isn't just a number. It tells us Tillray is effectively, losing money on every dollar of sales before even considering interest and taxes.
Wow.
It's a fundamental challenge to their business model right now, largely due to high selling, general and administrative or SG&A expenses relative to their top-line growth. Can they translate that revenue growth into sustainable profitability? The numbers suggest that's still a significant uphill battle.
So even with revenue growing, they're still bleeding that much from operations. It sounds like maybe they're sacrificing profit just to grow market share. Is that sustainable? That brings us to their financial health, especially those debt levels and cash flow figures that, often keep investors up at night. I'm seeing total debt around $563.7 million and a cash balance of $200.5 million. Their total debt, minus their cash reserves, leaves them with a net debt position of about $363.2 million. That's the company's true debt burden after accounting for available cash. How does that picture look, especially with that operating loss?
Okay, this is where it gets really interesting and frankly a bit concerning for investors.
Yeah.
Tilray Brands has significant near-term debt maturities specifically, over $100 million due within the next 12 months.
Right.
And here's the picker. Their operating cash flow for fiscal year 2025 was negative, $56.6 million.
Negative.
Yeah, negative. Their free cash flow is also negative, impacted by capital expenditures for production facilities and integration costs from recent acquisitions. With over $100 million in debt due within 12 months and negative cash flow, Tillray is essentially trying to run a marathon while constantly looking for a gas station. This isn't just a risk, it's a looming deadline that screams liquidity concerns, and it's even flagged in their own risk factors regarding refinancing efforts.
That's a stark image. So with those financial pressures, what does this all mean for their competitive position? They seem to be in multiple categories: cannabis, alcohol, wellness, trying to diversify. Is that a smart hedge, or are they maybe spreading themselves too thin?
That's precisely the dilemma, isn't it? Tilray Brands has carved out a position as a top 3 Canadian licensed producer by sales, and they've made inroads in the U.S. THC beverage-infused segment through strategic acquisitions of regional beer brands. This multi-category portfolio and international distribution network, Canada, U.S., EU, offer a certain scale, allowing for better cost negotiation. That's a real advantage in a competitive market. However, zooming out a bit, these strengths are partly offset by an aggressive competitive environment with many new entrants, persistent price compression, and ongoing integration challenges from those recent acquisitions, like Hexo and Montauk Brewing. And of course, the ever-present regulatory uncertainty in the cannabis space acts like a constant fog.
Okay, we've seen the shaky financial foundation, but how are investors actually trading this story? Let's turn to the charts and market sentiment to see if the street is buying or selling the Tilray narrative. For anyone looking at the technicals, Tilray Brands has traded in a tight range of, $96 to $1.28 for the last 4 weeks. closing most recently at $1.06 on September 11, 2025. What do these numbers tell us about the short-term outlook?
Well, the short-term charting offers a pretty clear message for tactical investors. We see clear support holding at the $95 to $1 range,
Right.
while significant resistance sits at $1.20 to $1.30. Multiple failed breakouts above $1.30 indicate persistent selling pressure. It suggests the market just isn't ready to push it higher yet. For those watching the charts, the message is clear. The stock is consistently trading below both its 50-day simple moving average, $1.11, and the 200-day, $1.28.
Which isn't good.
No, it signals persistent downward momentum. Think of it like a boat battling strong currents heading in one direction, while one indicator, the Relative Strength Index, or RSI, is mildly oversold, near 40, potentially hinting at a bounce. The high volatility and strong resistance tell us that sellers are still firmly in control. This isn't a stock for the faint of heart, given how news can whip its price around.
So the charts are basically screaming caution, not celebration. For investors hoping for a turnaround, it sounds like the technical tea leaves are quite pessimistic. What about recent news and overall sentiment surrounding Tilray brands?
Interestingly, on July 30th, 2025, Tilray Brand's 10K filing detailed ongoing restructuring and a renewed focus on cannabis and beverage synergies. But the market response was quite muted, largely due to those persistent operating losses we discussed earlier.
Right, the fundamentals are still dragging it down.
Exactly. As of September 11, the analyst consensus is a hold or neutral, with target prices averaging $1.10 to $1.30. This implies very limited upside from current levels, and we haven't seen any major upgrades or downgrades recently. That suggests a lack of strong conviction from the analyst community for a quick turnaround.
And what about those who know the company best? Any insider activity or chatter on social media that might give us a clue? Are insiders putting their money where their mouth is?
Well, insider transactions show several directors, like Stephen Cohen and Johan Herholt, received RSU grants in late July. Those are restricted stock units, essentially future shares tied to conditions, not immediate cash purchases.
So not exactly a vote of confidence with their own cash.
Precisely. Importantly, there were no material open market purchases or sales reported last quarter, so no big buying conviction from insiders. Social media sentiment is generally cautious, retail forums highlighting liquidity risk and ongoing dilution concerns. And the broader implication is that Tilray brands declined over 7% on September 8 due to intensifying skepticism about cannabis sector growth and lingering doubts about the company's path to profitability.
Yeah, I saw that drop.
They also faced renewed Nasdaq compliance pressures, leading to a further 5% drop as they struggle to maintain the minimum bid requirement. We even saw a reverse stock split approval back in early July aimed at restoring compliance and improving flexibility. This indicates a consistent struggle to meet basic exchange requirements and maintain investor confidence.
Okay, so with all these challenges weighing them down, it sounds pretty tough. What could possibly change the narrative? Are there any upcoming catalysts for Tilray brands that investors should be watching? Feels like they could really use some good news.
Yeah, and this is where the potential for major moves, or at least volatility, lies. In the short term, Q1 fiscal year 2026 earnings are scheduled for October 15th, 2025. That will be a significant event.
Definitely one to watch.
We also have additional beverage products planned for a U.S. rollout in fall 2025, which could generate some buzz. Other market-related catalysts include ETF rebalancing in November, holiday demand reporting for cannabis sales, and updated institutional holdings in December, all of which can influence liquidity and sentiment.
Those sound like short-term drivers that could create some movement.
Yeah.
But what about the longer game? What could provide a more substantial structural shift for Tilray?
For a more substantial shift, significant upside optionality could come from progress on U.S. federal cannabis reforms. That's the big one everyone's waiting for,
The
right?
holy grail for the sector, yeah.
Absolutely. The company also signals ongoing evaluation of tuck-in acquisitions in beverage alcohol and U.S. cannabis, which could expand market share. And critically, the expansion of recreational cannabis in EU markets could drive substantial longer-term revenue growth. There are also persistent rumors about targeted M&A or strategic partnerships that could provide a boost, and structural maneuvers like further reverse stock splits if Nasdaq compliance remains threatened, though that's more about survival than growth, frankly.
Those sound like big ifs that could move the stock significantly. But what are the concrete, more immediate risks facing Tilray brands that investors need to be aware of right now?
The critical question here is definitely about managing risk, because there are several layers. Stock-specific risks include those recurring operating losses we've mentioned, substantial upcoming debt maturities, with over $100 million due within 12 months.
That looming deadline again.
Exactly. Plus the ongoing need for periodic capital raises and potential dilution from RSU and option exercises. All of these are explicitly listed in the risk factors section of their July 28, 2025 10-K filing. Integration difficulties with acquired businesses like Hexo and Montauk Brewing are also highlighted as a material risk. These can drain resources and management focus.
So, just to make sure I'm crystal clear, what you're saying is they're burning cash, they have a big bill coming due soon with no clear way to pay it from their own operations. And beyond the company itself, what about the broader market and economic factors at play?
Precisely. The funds aren't being generated internally, which forces them to look elsewhere, often through more debt or selling more shares, which means dilution. And those broader factors are also significant. Market and sector risks include the ongoing regulatory uncertainty surrounding the cannabis industry, intense pricing pressure from a crowded field, and fragmented wholesale markets, all making consistent profitability incredibly challenging.
Right.
On top of that, macroeconomic risks, like rising interest rates and tightening credit, could also limit access to capital for unprofitable companies in this speculative sector. That makes it even harder for Tilray brands to refinance debt or secure necessary funding for growth.
Okay, so we've covered a lot of ground here, from the financials that seem to be burning cash to the technical screaming caution, the muted news, and future possibilities, along with the very real risks. When you synthesize all of this, what's your overall rating for Tilray brands right now, and what's the rationale behind it?
So looking at everything, given all the data and the analysis, my overall rating for Tilray brands stands at a 3 out of 10.
A 3, okay.
Yeah, a 3. The core business remains exposed to significant sector-wide headwinds. We're talking weak profitability, recurring cash flow deficits, high leverage, and persistent regulatory hurdles in major markets. While the diversified business model across cannabis, beverage, alcohol, and wellness does provide some resilience, persistent dilution, ongoing integration risks, and the absence of clear near-term regulatory tailwinds just cap the upside for both short-term and long-term investors right now. Technically, there's no confirmed reversal. Momentum remains bearish. Furthermore, analyst consensus and insider activity do not show strong conviction for rapid improvement. The stock trades near all-time lows. And while it may experience volatility on upcoming catalysts, it lacks robust fundamental justification for an aggressive buy at this point.
And for someone considering Tilray brands for their portfolio, what kind of investment horizon would this stock be best suited for? Is this a buy and hold or something else entirely?
This stock is definitely best suited for short-term tactical trading, primarily around sector or regulatory catalysts that could trigger brief price movements. It's absolutely not recommended for long-term investment until we see a confirmed improvement in profitability, a strengthening of their liquidity position, and greater regulatory visibility within the cannabis sector. Without those fundamental shifts, the risks currently just outweigh the consistent long-term upside potential.
Wow, okay. That's a lot to consider for Tilray brands. It's clear that while there's potential, maybe significant potential down the road, there are also significant headwinds and risks that investors need to be fully aware of right now. It's a classic investment dilemma, isn't it? The promise of a huge future market versus the painful reality of today's balance sheet.
Indeed. And this forces us to consider, for you, our listener, in a sector as volatile and speculative as cannabis, with the promise of future regulatory shifts, how do you personally weigh the current financial realities against the long-term potential when making your investment decisions? What criteria become most important for you when assessing a company in this kind of flux?
A fantastic thought to leave you with. Thank you for joining us for this analysis. We hope this has given you a clearer picture of Tilray brands. Remember to subscribe, like, and leave a comment below with your thoughts or any companies you'd like us to discuss next time. We appreciate you tuning in. Until next time.